I made a statement to a friend yesterday, and I'll come back to this house. We'll talk about this one in a minute. I'm going to use this as an example here. But I made a statement to a friend, and when I said it to them, they gave me that look that Joe Rogan had on his face when he was in that bake box car with Be Real from Cypress Hill. Like, just the most stoned he's ever been, that type of look. I said this, and they gave me that look. And they knew I was looking for spec homes to build, possibly moving my primary home. And they're like, well, why haven't you moved yet? And here's what I said. I go, I'd rather pay $100,000 more than risk losing $600,000. Then they gave me the Stone Joe Rogan look. And they didn't fully comprehend what I was saying. So, let me explain. If we're in a bubble, I don't want to be the person that buys at the top right now, because the top is pretty goddamn high. What I've been observing in the market for the last 18 months is craziness in prices. It's not even price creep, it's just these massive jumps. And I was trying to explain to them, look, if prices stay high, then big deal. You know, prices are high now, they're high from a year from now. Big deal. What if they go up a little bit? Big deal. Like, I'd rather understand that this is a new normal and then buy in, rather than buying something and then losing like $500,000 or $600,000. I can be patient enough. Like, where I live, how I live, life ain't bad. I don't need to make a hurry up rush decision right now. Excuse me. And then they had to sit back and we got into a deeper conversation about that. It's like, you're seeing more banks come out, more analysts come out saying that the market's overheating, that we're potentially in a bubble. What's not in a bubble? We have overconsumed stuff with the $10 trillion or whatever we threw in the system. It's going to cool off at some point. And I started explaining, like, look, let's just say prices go up, at the normal rate of, what, 3, 5, 7% over the next year. It's like, I'm willing to pay that extra, knowing that, because the downside risk is so much, I'd rather just pay a little bit more. And if you listen to my channel, I talk a lot about wealth preservation. Everyone always talks about how to make money. Side hustle, side gig, start this, do that, invest over here, buy these equities, do cryptos. No one ever tells you how to hang on to the money. So to me, that's the trick of it. Once you get the money in the bank, you don't want it. You don't want to let it back out, and it can happen very quickly with homes, which I don't even consider investments. I consider them savings accounts at the end of the day. Another episode. So I'm explaining, like, look, this ratio of, like, risk paying $100,000 more versus losing $600,000. The gap is so big. I don't see the point in taking the risk right now. And then they slowly removed the stoned out of my mind Joe Rogan look. I think everyone needs to take, and I'm not giving financial advice here. I'm giving you my insights and my conversation with somebody. But you should step back and say, do I need to move right now? Do I need to buy something right now? What is the inherent risk? If you're going to buy a $300,000 house and you got to risk it going up or down 10%, that's $30,000. Just something you got to think about. And then, to go with the whole, they didn't understand the, pay $100,000 more versus risk losing $600. They're like, well, shouldn't you sell your house right now? You can get a lot more money for it because the market's so high. And I did an episode on this in the past, and I can do it again. But look, just to use round numbers, if you have a house that's $1 million and the market goes up 20%, then you just gained $200,000 in value. All right, so that makes sense. Really easy math here. The problem is, if the house you want costs $2 million and it goes up 20%, well, that went up $400,000. And I was trying to explain to them that thought of there's no really winning this game. Sure, on your balance sheet, you're up. You're making money on your home, but the cost to acquire your next home, assuming it costs more than the one you have, gets more out of reach. So I gained 200,000, but the house I want went up 400. So I'm still down 200. If that makes any sense at all. And it's like I see a lot of people who aren't very savvy with investing. They don't understand that part of it. It's, let's say you're going to sell your home for 300 and buy another house for 300. I understand that. But if you plan on moving up, which many Americans do, the house you wanted to buy went up the same amount, then think about it. Let's do $1 million versus 10 million. $1 million home goes up 10%, you gain 100,000. The $10 million house went up $1 million. Very easy math to understand. So, we can sit around and talk about, is this a zero-sum game? Is it a net negative gain? On your balance sheet, yes, you're making more money on your home. You have more assets, you have more value, you have more wealth. But the cost to acquire the next home, typically, it's going to cost you more, and it doesn't make this like 1-to-1 sense. You gained $1, but the other home might have went up $1.50. So just something to keep in mind. But I'm going to show you this chart here. This is the stuff that's got me like, what the hell's going on? I'm looking at this joint, and this is one that keeps popping up. It's a newer construction. They're putting it up for like low 2, I want to say was the original listing somewhere on their website when they were building it. Pulled it off the market. Thing pops back up for 3.7. It's like 2,400 square feet. It's a nicer, apartment condo type thing. There's no way in hell for where this is at I would even think about for a nanosecond of spending nearly $4 million on a place like this. It's listing removed. Now it's back up to, actually I think it's back up to 3.4 or 3.2 or something. Now they're trying to bring the price back down. But you can see in February they're trying to push this thing for 3.7 because the market dynamics changed so much. Tell me this isn't bubble-like material. $1,400 a square foot for anything in Michigan is out of your mind. It's just bonkers. That's really nice. That's really nice River North type real estate in Chicago. So you can see they already knocked off $3 million because they couldn't sell the damn thing. But when I see numbers start jumping from like $2 million to $3.4 million, yeah, it kind of feels like a bubble. This isn't price creep. This is it's price gouging. Oh. So do I want to be the person, for example, that buys into a 2,500 square foot type apartment for $3.7 million, and look how fast they lopped off $3 million, $2.5 million, millions, million, billion, trillion, knocked off $200,000 to $300,000. I don't know why I keep mixing that up. Yeah, this says bubble to me. This is scary stuff. Another example, I just pulled this one up. I saw this new listing pop up. 3.2, out of your mind bonkers, 4,900 square feet on a quarter acre. That's another thing that bugs me. I hate these white houses that are popping up everywhere that are the farmhouse type look, and it's just getting to Michigan after all these years. But this is 3.2 million. They're not doing really any brick. They're not doing any stone. This is probably just sheet metal. It's not copper. It's mind-blowing to me that people will spend this kind of money knowing that the builder's probably cleaning up, and I can't say that for sure. I could not spend 3.2 and get a house that's basically siding and sheet metal. When there was homes selling for less than this that were brick, real stone, not that fake stone, with copper, like with, all the limestone around the windows. This is a sided house, farmhouse at the end of the day, and they're trying to sell it for 3.2 mil. I'm thinking back before the bubble, this thing might have went for, that home might have sold for, I don't know, at 5,000 square feet in that area, 2.4 maybe, up to 2.6, I'm guessing, something like that. The problem is they're finding these homes and they're tearing them down and they're paying like $1 million just for the lot. So you got a quarter acre you're paying $1 million for, $800,000 to $1 million for. And then you're throwing up these farmhouse type builds And the next thing you know, you're up to 3 million. And it's bonkers because I feel like I've seen homes like that before, 4,500 square feet to 52, 5,300 square feet, running mid twos. There was one that just sold. What was it? It was up for 2.4. I think then they ended up selling it for like 2.3. Similar size. This thing's not worth $1 million more than that house. But again, this is what's going on with this bubble right now. We're tearing down houses for $1 million lot, quarter acre, throwing a farm style house on it with no brick, no stone, no limestone, no nothing, and charging $3.2 million for it. So if you ask me, do I feel like we're in a bubble? Yeah, it kind of feels like a bubble. My only question is this the new normal? You see, with the amount of money, the money supply, what went into the system in the last 2 years? Wages are up. Inflation's bonkers. We don't know what's going to happen here in the future. A lot of uncertainty. The only thing I don't know is this the new normal? If this is the new normal, then I'll probably buy a new house next year, and I'll just have to deal with the prices. But I'm gonna wait, and I'm not looking for a pullback. It's not about looking for a pullback to save money. It's a pullback to protect my wealth, if that makes any sense. Going back to the wealth preservation. Who the hell wants to buy something and lose $100 to $200 to $500,000 in 12 months after it gets pulled back? Then it spends 2 or 3 years climbing back to just where you were. I don't want to be 5 years in and saying, "Oh, the house is back up to what I paid for it," but I spent 5 years paying property taxes, and then I got to pay a realtor to sell it. I'm going to lose a couple $100,000 on that house. So, yeah, I'm going to sit tight. And when I see this crap going from like 2 million to 3.7 back down to 3.5, and if they lopped off 250,000 right now, I'm guessing you could probably go in and knock off another 250. So that's how much extra play is in these prices right now. $500,000? It's like, come on. Tell me we're not in some kind of bubble right now. It doesn't mean it's 2008 bubble, but we are in some kind of bubble. It doesn't mean housing prices are going to crash by 75% and the world's going to come to an end. Again, I'd rather pay $100,000 more next year than the risk of losing, $500,000 or $600,000. That's my thoughts on if you should buy a house right now. Do your math, look at the pricing charts, see what's going on in the neighborhood. Think about if a market does crash. If you hang on to it for 5 years, where does that leave you? I say proceed with caution. And if you don't need to be in a rush right now, I say don't be in a rush. But that's how I'm thinking. That doesn't mean that's how you get to think. Anyways, if you got a comment, drop one below. Until then, I'll catch you on the next one.